So another big thing that we've noticed is diversification. People hear you speak about diversification, but what exactly does it mean? You hear I was speaking about risk off a few minutes ago, and I was talking about bonds. Having bonds inside your portfolio would be a diversifier from having total stocks, right? If you have just stocks, if you have one stock, you have no diversification. You only have stocks. You have diversification inside your stocks, but you don't really have diversification inside your portfolio. So why does diversification work, and how should it work? Diversification helps you to hedge risk. It helps reduce the risk. So when I say diversification, you want to think of having the classic not having all your eggs in one basket. Sometimes you want to have money invested here, you want to have money invested there, but let's think more sectors, right? So you have your money invested, some money invested in the United States, some money invested in Europe, some money invested international total. And when we see, and what we've seen in the last year was international markets outperform US markets. So if you were totally stuck inside the US market, you would have missed a lot of returns. So diversification helps with that. Now, one thing about diversification is that you probably won't ever catch all of your returns. One example would be, let's say you invested in one of these high flyers that had great years in these last few years. Let's say Nvidia. Say you only own Nvidia stock for 23, 24, 25. You made a lot of money if you only own Nvidia stock. But coming into the beginning of this year, when that stuff started to go down and crash, you would have lost a lot of money, right? Only on Nvidia stock. Now, if you were diversified, you still would have made gains, even if you were just diversified in S&P 500 indexes of 25, 23, and about 18% in the last few years. And that's nowhere near what Nvidia did as a single stock, but it's still a great return. And then when you see the move down that Nvidia took, being diversified will help you so you're not absorbing so much of that blow. If Nvidia is only 2% of your portfolio versus 100% and it goes down X amount percent, that's much less of a magnitude or impact on your portfolio. So we want to be diversified. We do want to have parts in there that catch the winners, but we need things that are, as we see right now, when people worry, they're diversified into gold, they're diversified into well, until recently people had tried crypto. We saw crazy moves in that here lately. I think that has more to do with liquidity. That's for another video with Bitcoin and crypto. But diversification is key for long-term investing. And we're speaking about long-term investing here. We're not talking about day trading or hopping in to make an investment for a year. We're talking about long-term investing to see compound interest work and see your portfolio grow so you can be set up for long-term success. You can have options when it's time to retire or when it's time for you to take money if you need to pull a different lever.